All right, good morning, everyone. And by the time you read this or hear it, it's afternoon. So, good afternoon, everyone. Hope you guys enjoyed your weekend. It was a hot one here in California. Uh, but it's supposed to cool down, so that'll be nice for like one day. Anyways, markets are crazy lately. We are seeing more lows coming back in. Um, it looked like for a second we were going to see a nice run back up, but not so much. Okay, not so much, unfortunately. So, as you can see, I mean, just to give a quick before we jump into this, we were running up. We made that 3,800 low, and we were running up and then consolidating. But then, Thursday we got what I'm calling anticipation into the CPI numbers on Friday. That came out, and we just dropped back down pretty much 3,900 level. So we need to hold this spot into this coming week. Otherwise, we can see 38, 37, 50. The lower we may go. Okay. And this week, there's a lot of reports coming out. Monday's going to be fairly calm, except Fed Bernard is speaking. But Tuesday, Wednesday, and Thursday are the heavy days. Friday, there is Powell. So we can see a lot of action. So I am leaning most of these ideas short. Okay. Whether it's a short skewed strangle or a like short call spread for the most part going into this week, because I don't feel like we're gonna bounce as much as I want to. There's just too much reports coming out, and I don't expect them to be great. So let's get going here. First one that I'm looking at is CAG, right? Conagra Brands. Now I'm playing, my idea here is to play this consolidation right here, okay, because obviously this did have a great run up from its 1 year low here, and this might actually be the 2 year low as well. Okay, it ran up fairly good, then it consolidated, and then it broke down hard right here on the 18th of May. Big down day, and then ever since that it's been going sideways. So I want to go ahead and play this, and it's actually gonna lean it long, but only barely. Okay, so I'm looking at getting a 36 call pretty much up here at resistance. You're gonna have the 21, actually you're gonna have a little bit here at 33, then you have the 21 just over 33. The 200-day and the 50-day are like stacked on top of each other right now, and then you got run room all the way to 36 resistance. So there's a lot upside potential here. Coverage. And then support, I'm looking at selling those 29 puts. That's going to get you below the current low, but you do have support. Just want to see it go sideways for a little bit longer. We are in the July monthly. 30 tomorrow will be 32 days, so we shouldn't have to hold these too long. Now, this isn't the most liquid on options. The stock's not too bad. But as you can see, Friday, the strikes I'm looking at didn't have any volume. So I would set this with like a price that you're willing to take if you like this chart, you like this play. And don't chase it, just set it to where you're comfortable and be good to go. Okay, so in this case, those 29 and 36 is your $2 past expected move on both sides. Okay, 10 cents wide. But so I would be hitting this at like 30 cents and just let it sit. Okay, it's an 82 pop. It does lean it slightly long. Right, and it's 120 bucks with those 4 contracts, giving you $1,300 in buying power. Okay, so it's all in all, it's not that bad as long as it continues staying sideways. All right, the next one that I'm going to be looking at, actually a bullish play because it's Chinese stock, is going to be FXI. Right, we did see them make their low. They chopped around a little bit and then started pushing up, and we're actually stacked 3 of the 4, right? The major one, we're not quite there yet, but 821 and 50-day are all stacked to the upside. A little bit of slowing down here. You can see them kind of going sideways now. That upward momentum slowing down, but Thursday and Friday did hold that 8 EMA. So as long as it can hold the 8 EMA, I want to just continue to take this long. All right. So two ways to play this one, and it's not the best credit on a defined risk play. But if you have to define it, this is what I would do. I'd be looking at a 31 put spread, $1 wide, because that's going to give you kind of the most credit. All right. And that's below all three moving averages, right at some good support level. So it's not bad. Okay. And then the undefined one, I'm looking all the way down at the 28s. That's going to get you down at a lot larger support area, a lot more run room. 1, 2, 3, 4, 5, 6. Like, you got a lot more support on it if you go naked. But if you got to go defined, this level's not bad. It is a 30 delta. So when you take a look at it, here's FXI in July. Those 28 puts get you $2 past the expected move at a 10 delta pretty much. Got to get 25 cents. Unless you're okay going with a boatload more contracts, then you know, whatever you want to do. But for me, I like to get at least $100, so that would be 4 contracts at 25 cents. It's a 91% probability. Really, really nice odds. Okay, $100 for $1,100. Not bad. Then you come down here to that 31.30, right at a 30 delta. Okay, again, about 25 cents. You're looking, risking 3 to make 1. And this is only, you know, $300 of buying power, obviously. And a 68 pop, so it's still really good odds on this one. But just showing you, right, you really want to get 1/3 the width of the strike. So 33 cents. That's it's off a little bit, you know, 8 cents. But then it's 44 instead of 66, so then it's off by 20 cents. And now it's off by almost 40 cents. So you can see that the $1 wide actually gives you the best credit to buying power scenario here. In the $5 wide, you don't get jack. So I would look at it like that, okay? All right, next one is going to be GDX, right? Gold miner ETF here. And gold really ran up to those all-time highs, dropped like a rock, and now it's sort of consolidating again. Had some good action on Friday when the numbers came out. Gold just kind of skyrocketed. But there's a lot of resistance here. So again, I'm playing this channel. You can cover this little one too, but looking for it to continue going sideways. Maybe a little bit of breakout, but there's a lot in its path here. So looking at doing a 38 call. Going to be up above the 21 200 day, the 33.5 resistance, the 50 day. You got gap fill, then you got this resistance at 36 level, then you got gap fill, then you got gap fill. So you get the point. There's a lot of resistance on the way up, even if it does start to push up. And then I'm looking at a 28 foot, which is going to get you below the current low support at 29 like 60 level. Oops. And then I think that, yeah, there is one more support at like 28.80. You got reasonable. We're just looking for it to continue going sideways. Okay. So here, July 15, GDX, those 28 puts, $2 past expected move, and those 38 calls, $3 past expected move. Okay. 45 cents plus or minus. You can get away below. I mean, you can go all the way to 34 cents here, but let's just call it mid price right now, depending on where it opens. Okay, you're talking 82 pop. It leans it a hair short, 1 delta, not a lot there. $135 for $980 in buying power. Okay, not bad. All right, next one, roadblocks. Okay, leaning this one short because it's obviously downtrending, but we started to consolidate down here after making that low. We now got this channel going on here. It did break down on Friday, and I hate putting on short plays when, you know, something's down 3, 4, 5, 9% in this case. But there's a medium squeeze, and again, I don't feel like this week's going to be any better. So while it's not really chasing it, it does give us some coverage. So looking at those 40 calls, going to get you above multiple levels of resistance, major 50 day there. Okay, and I'm looking at those 17.5 puts. Gonna get you below the 2-year low. It's also a 2-year low here. Sorry. Excuse me. So you got a lot of support still. You got support here, then you got the low. Okay. So just want to keep it going, but it is going to give you a little bit of short delta here. So when you look at it, 17.5 puts, $5 past expected move. 40 calls, $5, $4 past expected move. 80 cents or better. I mean, right now you're probably going to get 82 depending on where it opens tomorrow. But at 80 cents or better, you're getting almost 12 short deltas, an 84 pop, 160 bucks with 2 contracts, and $1,100 to put on. It's not bad. Okay, defined risk. I don't really like the idea of it. You could do it, right? As long as you cover it, it still leans it short with a 70 pop. It's just a little low on credit, right? $1.20. You did the 15 20s, 35 40s, you get $1.20, you know, 1 contract at that point, 380 bucks at risk. You're going to get 4 short deltas with a 70 pop. It's really good odds, it's just low on credit. But that way you can get a defined risk play. Those 20s are still below the 2-year low, and those 35s are still they're right at the 50-day. You're right at some resistance. So, okay, that's what I would do if I had to define it. All right, and then the last one here, gang, is going to be Tesla to the downside. Looking at it, right, this thing has just been dropping as well. So want to go ahead and take this short during its little consolidation phase. We are still stacked to the downside with a squeeze. Looking at selling a call spread at the 820s. Now, depending on where it opens, might have to go up to like, or down in this case, to the 815s. As long as you don't go below 8, I'm okay with it. So it really just depends, because I'll show you in a minute why. But if you can get the 820 call spread here, you're going to get above the 50-day. You got 1, 2, 3, 4, 5 levels of resistance before you get tested at that 820. Okay, and then you got support all the way down here at 622. Damn, I hit 622, huh? Alright, so it's got some run room down. I like it. When we look at it, July, right? The 820, 825s are $1. That's what I take on the call side. So 77 pop, 1 short delta for $1 in credit. Now, if for some reason maybe it opens a little bit lower, that's still fine. I wouldn't go any lower than the 800s. But if you went here, see, look at that. Okay, so spreads are a little wide. You see how? Ooh, all right. About 810s. I'm cool with that too. It's going to be right at the 50-day. So check the spreads, see when they open up if they get a little bit tighter. Preferably 820s. Okay, but you might have to go all the way to the 810s where you get over $1. Right? You might even be able to get 815s and hit it at $1. You never know. Spreads are wide. Okay? That's going to be it, you guys. Just kind of playing it safe, playing it more short. We'll get through this week. And then we have a 3-day weekend after this week. The 20th on Monday is a holiday because of the Juneteenth day on Sunday, the 19th. So they're going to observe it on the 20th. So we'll have a 3-day weekend this coming week. So watch list will go out probably on Monday. So, all right, gang. Well, that's going to be it. If you're watching this on YouTube or Facebook, please hit the like, subscribe, and I hope one day to see you guys in chat. Take care, everybody.